Hello, everyone. We want to welcome you to our webinar today. We're excited to have Larry Sheetz from Avalara joining us, and Larry will be presenting on how to see 2020 in tax compliance this year. And before I pass it over to Larry to cover on this topic, I would like to remind you that this session is being recorded and it will be posted to our on-demand webinar library for you to review and share with anyone. And if you do have any questions, please feel free to type those in the questions box. We will get them answered during our Q&A time at the end of our session. And so now I'm going to pass it over to Larry to kick off our presentation.
Great. Thank you so much, Angie. Thank you all for coming. My name is Larry Sheetz. I'm a sales executive on the Microsoft Dynamics team here at Avalara. I'm also the customer-facing rep for Avalara's partnership with Innovia, and I'm looking forward to hopefully meeting most of you in person in May at Notre Dame. So today we're going to be covering Nexus changes, how we see the Nexus landscape evolving over the next year or so, as well as our in-house resources and our platform capabilities to address how those Nexus requirements and how they've complicated your compliance efforts and how we can relieve that burden for you. So we've allotted about 40 minutes for a high-level overview of the Nexus landscape, the complexities of it all, as well as a demonstration of our broad capability here at Avalara. And then we'll leave about 20 minutes for Q&A at the end. So you will go ahead and move forward here. This first piece, we're going to discuss the impact of economic nexus laws, specifically Wayfair, and how we've seen economic nexus regulations stemming from Wayfair grow in the last 12 to 18 months, and how those regulations differ state by state. First and foremost, Wayfair created this economic activity standard for states to collect sales tax for remote sellers. Currently, 43 of 45 states with sales tax regulations on the books have adopted an economic nexus standard in addition to the physical presence requirements. The two outliers are Florida and Missouri. Missouri still has some complexities to work through before rolling out any sort of regulations, but Florida does have economic economic nexus legislation up for debate in their state legislature, potentially to go live on that later on in 2020 to include both economic nexus as well as marketplace facilitator laws. So more to follow on that here in a moment. All right, so this is how we've seen Nexus expand in 2019. Of course, Wayfair rolled out in June of 2018 with that Supreme Court ruling. So we've seen significant growth. The 5 states that don't have sales tax regulations, we refer to them as nomad states. That's New Hampshire, Oregon, Montana, Alaska, and Delaware. And those 2 outliers, again, are Florida and Missouri. But the complexities of that for you, the business owners, is with all these new regulations rolling out, there's very little, if any, uniform standards. So there's a lot of complexity that's rolled out in the last year. And to be fair, from where I sit, I talk to business owners and finance folks like yourselves all day, every day. It's created an undue burden on businesses to meet these new requirements. Their processes were in place and in great shape for, say, a handful of states, and we've seen as many as doubling or tripling of Nexus obligations just due to Wayfair. And just to point a couple things out, there's no uniformity in terms of how California and Texas versus North Dakota versus Connecticut choose to address these threshold requirements. This is a little more information on the pending legislation in Florida. We're looking at Nexus threshold of 200 transactions of tangible personal property or retail sales exceeding $100,000. So that could take effect if it passes on July 1st of this year. And then a second piece of evolving Nexus legislation is marketplace facilitator laws. We'll get to that in a few moments, but this legislation would also take effect for marketplace facilitators as of October. So a lot of additional changes rolling out in the first half of 2020 for Florida, potentially into later on in the year as well. So Missouri, just at a high level, we're not going to get too in the weeds on this. We've got over 2,200 local jurisdictions, some of whom have multiple rates. In short, Missouri has to create some uniform standards internally before their Department of Revenue is going to pass any sort of economic thresholds for remote sellers. So we're monitoring all of that for you. If you have any questions, we've got great resources on our website, which I'm happy to share offline. But we're keeping an eye on both of these new states, Missouri and Florida, with their changing regulations. But just for your roadmap, there likely won't be any changes for Missouri here in 2020. Other highlights, not only did all these states roll out their requirements, they're also trying to find a sweet spot in their own right. So what those changes were in early 2019 versus today, for example, Texas is changing their laws, creating an optional single local use tax rate for out-of-state sellers. Louisiana is actually Louisiana is enforcing economic nexus as of July 1st with similar proposal that Florida has out. Georgia has lowered its remote threshold from 250K down to 100,000. They're not the only state that's done that, and that was as effective of January 1. So it's a constantly changing landscape. We do have resources to help you determine where you have an obligation, and then once you're live on our platform, we'll get into it in the demonstration, but we'll show you how we can continually track that activity so you're never caught off guard or caught by surprise by these changing regulations, both in terms of Nexus as well as how your products are treated within those individual states. One other key factor is, since the Wayfair decision in June of 2018, a lot of folks have some confusion regarding their requirement to register, changing from the old standard of physical presence to economic nexus. That is not the case. Physical presence has not gone away. We've just seen an additional requirement due to economic activity in a state. So that standard has not gone away. And Nexus, again, is the connection between a business and a taxing authority that requires the business to submit itself to the jurisdiction of that authority. So impact for businesses, specifically remote sellers, these states are going to be looking at where your property is located, where your warehouses are physically located, places of business, where your employees are not only headquartered, whether, at your standard headquarters of operations, or if they're remote employees, and if they're traveling for trade shows or going on site, they could be triggering a physical requirement as well. But again, I stress there's a lot to keep on top of. We have great resources and can help walk you through on a case-by-case basis on where you have a requirement to register. So that's part one at a very high level of how we've seen the Nexus landscape change in the last year to year and a half since the Wayfair ruling, as well as the present kind of granular level of ambiguity with states changing requirements that they had passed previously. Next, we're going to look at where we see this going, new regulations rolling out as far as marketplace facilitator regulations, as well as certain programs that can help mitigate some of this compliance anxiety, as well as overall burden on your business and resources to maintain that compliance. So we've discussed Wayfair in depth, with now, by the end of the year, likely 44 of the 45 states with regulations on the books having different standards. So one great program that we do a ton of work with is the Streamlined Sales Tax Organization. That's a collection of 24 states in the US that got together to standardize reporting requirements, registration requirements, as well as admin procedures. A unique feature about Avalara is we opened ourselves up to an audit by the Streamlined Sales Tax Governing Board to become what's known as a certified service provider for sales tax software. What that means for you, the end user, is that if you meet certain criteria, noted here on the slide as a volunteer seller, meaning if you don't have a place of business for greater than 30 days in the past 12 months, you don't have more than $50,000 of property or payroll in one of those 24 states, and you have less than 25% of total property or payroll in one of those states, you would be entitled to Avalara's registrations, sales tax calculations, return filing, as well as audit support free of charge should you meet these requirements. So we've seen not only uniform standards from this organization, which is more than half of the states that have sales tax regulations on the books, but also a great way to control costs while overall increasing your level of compliance. So this goes beyond just the bare minimum while also streamlining things, as the name implies, those regulations. So with the 43 to the 45 currently on the books, with different thresholds, there is some standardization if you are a member of this program. We could do a whole webinar just on SST, but again, if you have more questions, we'll address that during the Q&A or offline, and I'm happy to come back and do a webinar for SST as well, if that would be helpful. Now, the future of streamlined sales tax, I mentioned that there are 24 member states. For whatever reason, they're not likely going to be accepting new members. However, there are a handful of states that are rolling out essentially mirrored SST programs. Pennsylvania adopted its own certified service provider program in 2019, and then Connecticut, Illinois, and New Mexico are working to set up their own programs that mimic that as well. The one state that is working to roll out something, we just don't know what that looks like yet, is Virginia, both with economic nexus and marketplace facilitator laws. They're working internally to help remote sellers achieve compliance. When we have a better handle on what that specifically looks like, both in terms of standardized rules and regulations as well as filing requirements, we will let you know. We update that information on our website regularly. I'll pass a lot of that information through Angie as well after our call today. Now, what a lot of folks are referring to as Wayfair 2.0 is the marketplace seller regulations. Currently, 36 states have adopted these laws. These directly impact websites like Amazon, Etsy, eBay, Walmart. There's dozens of them. This puts the burden on the marketplaces themselves to collect and remit sales tax on behalf of third-party sellers. So if you have a store on Amazon and you're part of their FBA program, Amazon should be collecting and remitting sales tax on behalf of third-party sellers. Your obligation then is to just maintain visibility on where you have a requirement to register, as well as reporting. And just so you know, this is a whole other layer of complexity for Nexus as well as overall compliance. We have an entire marketplace team dedicated to not only rolling out a product for you, the end user, but we're also working with a lot of these marketplaces themselves to standardize their standard operating procedures. So we want our aim to be your go-to source for marketplace facilitator compliance. So if you have questions, we have resources here to support you, because we know there's a ton of ambiguity, and we envision a lot like the Wayfair decision, more and more states are going to be rolling out these marketplace facilitator laws in 2020 or 2021. And one thing that we'll address next is a lot of these challenges and the changing landscape of sales tax is not unique to the US. We're looking at and monitoring geopolitical changes with things like Brexit, as well as how marketplace regions like the EU are rolling out and adjusting their own internal procedures to account for marketplace transactions, application of VAT, as well as obligations for marketplaces themselves, how they're going to meet these new regulations. So we're staying on top of all that for you. more to follow on that. We're looking at a lot of changes here in 2020, especially regarding Brexit and how the EU is going to evolve their treatment of sales tax. So that's a ton of information. I'll pause here for a moment. I just want to overall address, we understand tax is more complex than ever. It's going to be constantly evolving. It's evolved more in the last couple of years than it has in the previous decades. And that's not going to change. It's not going to get any easier to do in-house. That's why we see as a great value add is through our staff as well as our technology, taking a lot of this compliance burden off your plate so you can get back to what you do best, while also getting you into compliance, reducing risk in the business. So just want to remind everyone that anybody selling anything anywhere should be thinking about their tax risk, whether that's in the US, whether that's North America as a whole, or internationally. We have a broad capability as well as expertise since 2004 handling all of this. So more to follow. If you have a specific need, we likely have a resource available and a platform to address that need, which is what we'll get into next. So the next piece, I'll pause here for a brief moment. We're going to look at the platforms that we have here at Avalara to address Nexus monitoring, sales tax calculations, dealing with your exempt customers, our ability to report, or run reports to make that compliance burden a little bit easier for you in terms of your end of month or end of quarter, end of year reconciliation, as well as our return service, all through the lens of getting you into compliance as your Nexus obligations grow and evolve, as your business itself grows and evolves, and keeping you ahead of the ever-changing landscape. So at a high level, our solution here at Avalara comes down to three primary platforms. First, we've got Avatax, which is our sales tax calculation engine. The real beauty of this system is we're designed around a pre-built integration model. So for the customers I work with at Innovia, typically Microsoft Dynamics customers, they've got a Microsoft ERP, whether that's Great Plains or the latest and greatest D365 offerings, whether that's Business Central, Finance and Operations. We have pre-built integrations certified by Microsoft. We plug right into your system and do those calculations for you, regardless of jurisdiction, regardless of those changing rules. We automate that process and we guarantee accuracy on every transaction. The second piece that goes hand in hand with Avatax is one of our exemption management platforms. Our most robust system is known as cert capture. That's where we're monitoring the exemption status through collection and maintenance of your exemption certificates. So on every transaction that Avatax is running, it's checking our exemption management platform, whether that's cert capture for that heavy lifting capability or our scaled down version, Avatax exemptions. We're looking at the exemption status, applying that correctly every time, and then returning that to your system. So how things dovetail here is we have about 56 reports that we can run and you can customize for whatever your needs are. And that feeds directly into our return service, where even as the return filing rules change state to state and jurisdiction to jurisdiction, we automate that process and stay on top of that for you. You just tell us where you have an obligation and what filing frequency, and we handle the rest. So we're going to start with Avatax, and I'm going to breeze through this platform discussion so we can get to the meat and potatoes here of the actual demonstration here in a moment. But this is where we're doing things like address validation, applying the correct sourcing rules, looking at product taxability, as well as returning that reporting information to your system. We're doing all that, especially with address validation, by looking at where this transaction is taking place and applying an actual latitude and longitude rather than relying on the traditional model of zip codes. Zip codes are great for the Postal Service, but we're seeing more and more zip codes contain multiple sales tax jurisdictions within them. We're capturing the correct jurisdictions on every single transaction by drilling down to the rooftop level, because we're seeing sometimes different ship to addresses that could be located next door or even across the street from each other, being subject to different rules and rates. And the liability for doing that incorrectly ultimately falls on the business. So we take that portion of risk completely off your plate. Some premium features: we can do VAT calculations, we can do consumer use tax calculations. We're rolling out cross-border duty and tax calculation as well in 2020. That's a huge initiative that we're rolling out, as well as matrix master UPC mapping. If you have questions about those specifically, we'll take that offline, but we're just going to be dealing with our standard functionality today in the demonstration. Next, we're looking at exemption management, both from the calculation piece, collecting those exemption certificates, making sure they're valid, and staying on top of all those changing renewal requirements that vary state to state as well. Some states, as I'm sure you're aware, don't require a renewal based on the type of certificate. Some states require 3 to 5 year renewals, and then states like Florida require annual renewals. Our cert capture platform provides a matrix that, based on the type of exemption, whether that's manufacturing exemption, farm use exemption, just simple reseller certificates, we have when those expire by state available to you, so you can stay well in front of those expiring certificates if that is a need. Overall, we're just looking to help you streamline the management of that document lifecycle. So that's automated in our cloud, it's available to you, and it's really a great feature if you're faced with an audit. And we've been around since 2004, and we've had the cert capture specific functionality for the better part of a decade at this point. So I bring that up because auditors are intimately familiar with Avalara at this point, to the point where I've had recent customers say, I had an auditor from a state reach out, told him we were using your platforms, and he said, great, here are the reports that I need you to run for me. Send those my way, I'll look at them, and I'll let you know if I need to come out and actually do an on-site audit. So we're seeing right from that, little anecdote, the reduction in time to prep and then defend an audit reduced from sometimes days and weeks and months, even depending on the complexity and size of the business, down to a matter of hours and minutes. So it's a great value add because, if anything, you're not sacrificing compliance, you're increasing the compliance level, but just guaranteeing through automation that it's being done accurately and all that information is immediately available at your fingertips. This is a brief overview of the difference between Avalara exemptions and cert capture. I mentioned that Avalara exemptions, which is what I'll be demonstrating in a moment, the different functionality. The differences here mainly rely on the complexity of exemption management for your business. It's not necessarily volume-based. For example, you could have 1,000 different exemption certificates, but they're just in 1 or 2 states that your finance folks and your controller have really dialed in. Or you could have just a couple hundred, but it's spread out among 15 different states, and that constant compliance burden to stay on top of all of that is just more than your folks should be devoting their time towards. So it's more of an art than a science when we're finding the right platform, but we're going to be demonstrating the exemption capability because that's what typically, when I'm working with new customers, that's the road we approach first. If they require the more robust capability, both in terms of the bulk email request campaigns, which isn't just restricted to email, we can tailor that to faxes as well as using the postal service, but it allows you to maintain touch points at a much higher level than the traditional scaled down version. But more to follow on that here in a moment. Finally, our return service is fairly straightforward. At the end of the filing period, ahead of the 10th of the month where you need to file, you typically review a liability worksheet, and I'll go into what that actually looks like here during the demonstration. But this is where you're doing your reconciliation. We're seeing a dramatic reduced risk of exposure as well as time needed to do this. simply because everything flows downstream from our transaction calculations. We're guaranteeing accuracy on those upfront. So all the reporting that the returns are using, we're guaranteeing accuracy on those. So we're increasing that level of compliance while also reducing that return filing process for your business. So they go in by the 10th of every month or that filing period, approve the return, we lock it, or if you have questions, you'd be talking to your account manager and we'd be addressing those concerns. So then by the 10th of every month, we lock the system down and file on your behalf. So what that does is guarantees that you're never going to miss a filing date. Now, I'm going to move over to the demonstration here. Hopefully everyone can see my screen okay. This is the landing page, and this is the first piece that I wanted to walk through, because this heat map is what we use at a very basic level to monitor your economic obligations. This is where we're doing that threshold monitoring for you. We won't do the physical presence monitoring. We rely on you for that, because at setup, you designate where you collect tax. You come into this dashboard here. And based on the sales tax or VAT or GST that you are required to collect based on where your sales and economic activity is, you're just coming in and turning on these jurisdictions. So that's the initial setup. And then once you're live on the system, your account manager here, designated right here, is tracking where you have an obligation, where you've triggered a requirement. In this demo environment, we're looking at orange as where you're either currently registered or where you have a requirement to register and collect. Then yellow, in this case in Alabama, is where you're at 80% of the threshold to register and collect sales tax. So this is a cool feature here. The heat map is a great tool, but if you want more detail, you can run a sales by jurisdiction report. But say you're not registered in Georgia, but you've triggered that requirement, you can click this button here, and that dovetails immediately with that account manager interface. They're going to reach out to you, because one thing I do want to stress is registering in new states is a business decision. We'll let you know where you have a requirement, and then we'll approach that process, because one, we're going to look at, do you want to register? Okay, say you do. Two, which state and why? What triggered it? Because a state like Georgia is an SST member state. If we're looking at becoming a part of the Streamlined Sales Tax organization, you could get our registration for free, as well as all calculations and returns and audit support in Georgia for free. So that prompts engagement with your account manager rather than you necessarily just going ahead and doing it on your own. We can save you money there while guaranteeing it's done correctly. The second piece I want to drill into is, granted, let me take a step back. Everything that we're going to show on the transaction piece would be done in your system automatically. This is just going to show the granular level of detail for a committed invoice on our system. So I pulled up this invoice because, one, I wanted to show you that address validation piece, but I also wanted to have an invoice that shows multiple products and how we can handle the taxability and application of those taxes line by line, product by product, all in the same invoice. First and foremost, we're looking at the ship from and then the ship to. Ship to is where we're going to be applying that latitude and longitude for the transaction to make sure we're capturing all of the applicable sales tax rates for this location. We're specifically state, city if applicable, county if applicable, as well as any other special taxing jurisdictions. Next, we're looking at the exemption status of that customer. So your customer is identified using your own information, whatever you choose to put in the system, and then we're checking to see if we have exemption information on file. That would be this tab here. So all in less than half a second, we're validating this address, we're looking at the status of that customer. We're looking at the product itself, in this case, computer hardware, which we're treating as tangible personal property. Quick aside here for this tax code is these tax codes here are Avalara specific. The reason they're specific to us is this is monitored by a team of about 100 people who are constantly staying on top of the ever-evolving sales tax and taxability rules for different products across the more than 16,000 sales tax jurisdictions. So no longer do you have to worry about how your product is being handled in California versus Washington or Minnesota, so on and so forth. At implementation, you map your product codes to our tax codes, and then you're done. So that's one piece in terms of product taxability. And then this is how we're capturing all that information and applying it correctly. So in all these different jurisdictions, this product code is 100% taxable. So we're looking at fully taxes collected across all the different jurisdictions. Now we'll drop down here to the software piece of this invoice. We're looking at a different tax code here. If you remember, tangible personal property, software. In this jurisdiction, this is non-taxable. So even though we don't have an exempt customer here, this product is non-taxable in this jurisdiction. So you can see the hardware is, the software is not, and we're guaranteeing accuracy on all of that information. If you still have questions, you can review the calculation. But again, our tax codes, and this is a huge differentiator from Avalara versus our competition, the taxability and the sheer content behind our tax codes guarantees accuracy. All right, moving forward, so this is all in real time, done in less than half of a second. So moving forward to the exemption piece, again, this is our scaled down system. We have the ability to import existing exemptions, those valid exemptions that you currently have on file, rather than having to go back out to the customers, say they just renewed in the last 6 months and we've got a few years. If you want to leave that customer alone, you can just import directly into the system using our import template, or you can request a certificate with the customer's name, email, and a brief note as to why. That sends off an email to that customer with a link back to the system where they populate the data in just a few moments, and next thing you know, you've got a new valid exemption certificate for that customer. That is then applied to all subsequent transactions. Now I'm going to jump ahead to reports just to show the same level of detail that we had on the live transaction. You can export these in both a PDF or Excel doc. I'm going to show it in a preview just because we have hyperlinks embedded in here, so we can show you how deep we can drill into these individual transactions. So this is the same one that I just outlined in real time, but for your reconciliation and reporting needs, we have the same tax codes applied here, the different jurisdictions that were captured in that transaction, the tax that was either collected or not collected based on the taxability of the product. Now, moving forward into our return service to show that true end-to-end capability. I'm going to pull up a month here that I know has good data. This is that liability worksheet that I mentioned at the top when I was outlining at a high level our return service. But this just shows across your total sales for this period, total sales, taxable sales, and tax calculated, as well as the amount due across the applicable jurisdictions. So we've got total amount due, and then we go back to the states and jurisdictions where you have an obligation to file, and we look at the amount due for that period for each jurisdiction. Now we're past the 10th of the month. If we were approaching that deadline, you'd be able to come in here and approve. That's where you'd be matching up our reports that we just showed to what's being reflected in this, essentially a draft return, and then approve that. Once it's approved, we go ahead and close things down by the 10th of the month and file on your behalf. So we ensure that you don't miss a filing deadline. One quick caveat for that: if for whatever reason you're not able to get into the system to approve prior to the 10th, we go ahead and file on your behalf. Again, we have confidence in that because we're guaranteeing accuracy on our transactions up front. Everything flows downstream from there, so you will never miss a filing if you are using Avalara to file on your behalf. Additionally, if a state affords you a early filing discount, we'll be able to take advantage of that as well. That'll be included in our filing calendar, so you will be able to take advantage of that. So at a high level, this is our true end-to-end capability. But a couple things that I did want to call out here. You've seen through the entire dashboard the ability to switch company. This tab allows a parent company and multiple subsidiaries to be applied under one Avalara agreement. So they would get their unique reporting. We'd be able to monitor their transactions on an individual basis, basically delineating things out based on how you choose to file and if you want Avalara to be that true end-to-end solution. Now, to that end-to-end capability, that's obviously the ideal. That's where we can be the best fit for you. However, not every business's pain points are the same. So we do have the ability to break this up. Plenty of customers I work with just need help with calculations or just returns, and then a handful just want to use us for our exemption management feature. So we can mix and match however we need to based on what your pain points are, and then all through the lens of being able to get you into compliance today and continue to scale with your business as your business grows and evolves, branches out into new jurisdictions, as well as your Nexus obligations change. We're able to scale and provide a scalable solution today, whether that's using one of our solutions or all three, and adding more features as we go. So that's Avalara at a high level. Going to move forward. One of the most common questions I get asked specifically to the transaction piece is how long does it take? You're guaranteeing accuracy, which is great, but it's kind of a deal breaker if this is going to interrupt my business workflow, if this is going to slow down my checkout process, say, on the e-com space. The answer is you likely won't even notice it. All of this information from address validation, applying sourcing rules and jurisdictions, looking at the exemption status of the customer, looking at product taxability, verifying tax holiday status even, and returning that back to your system for checkout. All that happens in less than half of a second. So we increase your level of compliance by guaranteeing accuracy. We're increasing your level of efficiency because your folks are not having to go to these individual departments or revenue websites on a monthly basis and downloading their new rates. They're not having to stay on top of the taxability of their products across the 16,000 plus jurisdictions. We do all that for you. Also, we can get your folks back to what they do best. Now, when we talk about scalability, I want to address the Avalara model around integrations first and foremost. The reason I have such a great working relationship with Innovia is I'm on the Microsoft team. But for example, if you want to roll out a CRM and require a sales tax calculation there, we have capability for both D365 for sales, also Salesforce Commerce Cloud. Same thing with e-commerce. The biggest and best products in the e-com space, we likely have a pre-built integration there. Same thing if you have point of sale needs. We can get you into compliance today based on the systems you're using, as well as add in additional functionality as you grow or the business evolves. One other feature that sets us apart is our ability to support you building your own integration. Should you have that need, say for example, you want to build your own shopping cart, our API documentation is second to none. And we have great developer resources that if you need that, they're available through our website, but I can also provide those offline as well, should you have that need. It's one thing that we're regularly complimented on from third-party partners that we work with, who look at solutions from other vendors, not just Avalara. So our pre-built integration model, our ability to scale, as well as the API that we have and we can bring to bear, really sets us apart. So that puts us right at the 40-minute mark. Thankfully, as promised, I want to turn things over to Angie for the Q&A portion.
Thank you, Larry. We do have a question.
Sure.
Does Avalara assume any risk with non-compliance or audit support? Are we charged for this support?
In what regard? In terms of the streamlined sales tax or just in general?
In general.
Yeah, we have a notice management division as well as in-house tax advisory services that if you're looking at things like historical liability, basically you uncovered that a year ago you should have registered in a state like Virginia and should have been collecting but didn't. We can help, with our tax advisory staff. I had that example top of mind because I'm actually working with a customer on that specific example today. We can work with the state through our tax advisory staff to limit their look back period and get you into compliance. And then for any assistance with audits, that's kind of a case-by-case basis. I would need to know a little bit more detail. If it's a state where you qualify as a volunteer for the Streamlined Sales Tax Organization, we will definitely act as an audit liaison for that, since to be a volunteer seller, Avalara would be doing the transactions. We would be registering you in that state, and we would also be filing returns on your behalf. So we'd be doing all that work for you. So we would be the go-between for that state auditor and your business.
Okay, thank you. And is it possible to meet or exceed the economic nexus threshold and still qualify for SST?
Yes. The SST program is designed to support remote sellers. So more than likely, if you've triggered Nexus in an SST state where you're not headquartered and you don't have employees there, you're just looking at economic thresholds. So the obligation to register in an SST state stems from that economic threshold triggering. So should that situation arise, we'll quickly look at those 4 criteria, which are you didn't have a place of business in that state for greater than 30 days in the previous 12 months, you have fewer than $50,000 in inventory or payroll, and less than 25% of your business's total payroll or inventory housed in that state. So if we're just looking at economic triggering, you would get our services for free. You would qualify for our services for free in that state. So yes, if you aren't able to meet, say you weren't able to meet all 4 of those criteria, you can still qualify for the SST program. It's just not as a volunteer, so you wouldn't get all of our services for free, but you do still get the uniform standards for rules and reporting. We just wouldn't, Avalara would not be providing that for free.
Okay, thank you. And can Avalara help us to determine where we have Nexus?
Yes, so we can do that a number of different ways. I'm going to pull my demo environment back over here. So this landing page and heat map is one way that we can monitor. So we're going to be looking, assuming we're plugged in to where you're invoicing out of, we're tracking where those ship to and where those transactions are taking place. And your account manager is monitoring those Nexus obligations. In addition, our tax advisory staff that we have in-house they can run a full 45-state Nexus study for your business. That's a flat fee for $4,500, where definitively you'll get a full report on where you have a requirement to register, and then we can assist you with that registration process as well. A cool feature and how that product itself is evolving is that Nexus study is now starting to go hand in hand with a tax exposure analysis. If you have any fear of any back tax liability, we can usually address that in one shot. So we can have ongoing Nexus tracking. We can do a 45-state economic Nexus study. It goes beyond just economic. And we also have free resources on our website as well. So I typically focus folks towards our free resources if they're not already a customer, address all those concerns. If there's still ambiguity, we roll in our tax advisory staff for that definitive answer. If they are already a customer, we evaluate through the ongoing tracking of those transactions, as well as relying on the business to tell us if they've created a physical requirement or any other non-economic activity requirement. So it's a high-touch service. We have a lot of different ways to tackle it, but to answer your question, sorry for my long-winded answer, yes, we can.
All right, well, I believe that's all that we have for you, Larry, today.
Well, thank you so much. It's been a pleasure. Look forward to continuing to work alongside all the Innovia customers. I love working with you all. I'm looking forward to hopefully meeting most of you in May at Notre Dame. That should be a great event. If you have any questions, Avalara really puts ourselves out there as a resource for anything sales tax related, as well as ongoing compliance related. So don't hesitate to reach out. I'm happy to walk you through and answer any questions that you have offline and provide you with additional resources. So I'd like to thank Innovia for the opportunity to address all of you today, and look forward to working with you moving forward.
All right, well, thank you, Larry, for presenting today, and to everyone on the webinar. Thank you for joining us, and if you're watching on demand, thank you. And to let you know, we do have a few more webinars coming soon. Tomorrow, February 19th, we have Marlene Mankin from Innovia Consulting, and she'll be presenting on what are notifications, how can they be utilized in Business Central. And next week, we have Chad Williams from Innovia Consulting, and he's going to be presenting on explore the possibilities with Power Apps. So check out our website for more of our upcoming events, and that's innovia.com/events. And Innovia has a podcast going on. If you have not heard of it already, it's called the Innovia Conversation, and we want to encourage you to listen to our selection that Steve and Jeff have provided to us over the last year. They do about 2 episodes a month, and you can find out about all the different podcast platforms to listen to on our podcast page, and that's innovia.com/podcast. So check out our podcast selection and subscribe so you'll be notified when those new episodes air. And like Larry mentioned, Avalara will be attending our conference as one of our sponsors. Our annual customer conference is coming up on May 20th and 21st here in South Bend, Indiana at Notre Dame. Contact your rep or visit our conference page where we have all the details for our conference. That website is innovia.com/conferences. This is a free event for our customers to attend, and we would love to have you. So register now so you don't miss out on this great event. All right, well, thank you again for joining us, and we look forward to seeing you again soon on another Innovia webinar. Have a great day, everyone. Thank you, Larry.
Thank you.